right, so here we go. This is on crude. As you know, crude is trending down pretty nicely, right? So on the left-hand side, I have a Renko chart. Renko chart, you could have it, or your higher time frame chart, doesn't matter. Renko is pretty clear what the the levels, zones, whatever they are, and you see it works. Goes down, goes right to that area, goes down, goes right to that area, and this goes down, does what? Test the breakdown. So, all right. So the first thing, remember, you need to have a level. I mentioned this. If you don't have a level, you're gambling. It's that simple. If you don't have a level, you are gambling. All right, and also you're driven by FOMO, because you can't wait until the price goes to your levels. It's because FOMO, the FOMO needs to be overcome. So ask yourself, if you're not waiting for the price to go to your levels, either you have too few levels and you're waiting all day for opportunities, or if you have the levels and it's just still running around trying to get a trade on this market, that market, it is 100% evidence that there is FOMO. Remember, FOMO impacts entries. FOMO impacts entries, and it makes you get in when you shouldn't. Anyway, and where you shouldn't. That's a FOMO. So you have to understand the fears and how they operate in the trading environment. That's a different story. All right, so this was the trade in crude over here. Do you have a level? Yeah, you have a breakdown. So you have breakdowns, and then you have the zones, right? So what are your levels? Levels are just prior areas of buying and selling, where it was very clear that they were buyers and sellers there. So if there are buyers and sellers there, the chances are that they're still there. And if they are still there, which you'll see on lower time frames, then you get in. So over here, I'll show the crude what happened. So the market was going up, right? Okay, first of all, where is it? Okay, maybe, never mind. That was the other market I'll go over. But anyway, over here it was going up. Now let me ask you this. How big is this volume? That's the biggest volume in 63 bars. The biggest volume in 63 bars. Right there. Look at the print. 101. Multiply that by 100. So over 10,100 contracts just in this one print. So, I mean, what do you know? You know that that is distribution right there. That's your climax and distribution. And one of the buying and selling tests that I had explained on the prior thing, and also called out, when Wyckoff talked about it, is that it should have a climax. You should have a climax, and it needs to be in the base, preferably higher up for the selling base. It should be higher up, and this is exactly it. So, I mean, obviously, when it went up, boom, 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 selling. It's the biggest print there is. It's the biggest print. Since this low, which caused it, look, 108, right? Boom, 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 all the way up, 101, right there. 108 led to this. That was the climactic, right? And then the 101 is, you have your point of reference, that's climactic. Because the 108 was climactic, and 101 here is also climactic. It's not really 101 or 108, it's times 100. So that was 10,000 shares accumulated here. Not shares, 10,000 contracts, and here 10,000 plus contracts here. So once it, and then look, above it, 7,100 contracts. Below it, 5,000 contracts. Clearly, they're establishing selling, right? You sell high, so it's at the top of a trend, on the high of the base, sell, 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 sell. So I knew that there was selling. It was very obvious that the sellers came in, right? Now, this is why I try to explain to all my, folks that are Wyckoff traders, that you need to stop with that bullshit schematic that is making you lose money, and you need to have some way to read the market. I don't mean like read the market every move, but when it gets into certain areas, certain levels, you need to be able to see the selling. That's what I'm trying to say. You need to be able to see the selling and see the buying. If you just go and you look at a, what is it called? Yeah, I guess you can do it on a bar chart too if you have profiles. You can see the, I mean, it's not, I want to see the number. So maybe it works for you, but I want to see the actual numbers, the prints, because then I'll know that, okay, someone in oil is establishing 10,100 here, 7,000 here, and below that 5,000 there. And they're clearly sells. Who the hell is going to buy up high? They're going to buy here, not up here. So they're just selling to the other person who's buying the high. So as it comes here, sell. So maybe it ran a stop, I don't know. But all I know is that after a higher time frame, it's at a level, the breakdown level, right? And tap. Okay, now we see some basing formation. First, I want to see the low after that, which was right here. You don't do anything until this low is taken out, by the way. All right, that's a Wyckoff selling test. It has to make a lower low, just like in the buying test, it needs to make a higher high. All right, now I notice that this is your climax, and now you need that low volume test, and that happens right here. But it says LVT. In fact, the indicator picked it up. This is the LVT, or the low volume test. So you have the climax, and it's your secondary low volume test. How do you know it's a low volume test? It goes from 17. Well, first it goes from 71 at this level, and that's 7,100 contracts. Then 1,700, then slightly increases to 3,000, then 2,000, and then 3. If you notice the last 3 prints, they go from 3 to 2 to 3, meaning 30 to 20 to 3, from 3,000 to 2,000 to only 300. After that, crack. What does that mean? Climax, secondary test or low volume test, right? And then the break. This is what you want to see. All right. And when it breaks, volume increases 4,100, only 2,200, but then 3,900. Okay. So I know, here's what I know. I know the sellers are in. How do I know? The volume speaks. If you're trading futures, the beauty of futures is they will give you volume. They will give you volume, and if you have to develop the skill of interpreting that volume. Here it's very clear, this volume is the biggest volume in 63 up bars. 63 up bars. That should ring a bell. That should say climax, climactic movement, overbought, like a bell, right? After that, you have the secondary low volume test, and after that, you have your break. All right, now it's all about getting in. How are you going to get in? You need the break, by the way. Don't even think about, without the break. So when I first saw this, I was very confident in taking a short on the pullback. The only thing I kind of was very iffy about was these overlapping bars here. They were basing out on top of this area. That is a little bit dangerous if you're short. This area right here, right? This volume here, meaning they absorbed, they absorbed this area, and then so there's interest here, buying interest. Now these guys came right at that same level and kept buying. So this buyer is back here. I don't know if it's the same buyer, I don't care, but I know that the buyer buying here is buying here. Okay? That and this sideways movement. So that was the doubt I had whether this thing would turn or not. At least if you have this type of maneuver, usually what happens is it makes a higher high or at least goes to resistance. So I don't want to mess with that. So basically, for the bullish argument, you have the buyer here stepping in here, and you can see this base. You see this base on the candlestick, overlapping bars? It's building, 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 reaccumulating, 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 and then it breaks out like that. So usually when it does that, you know that chances are the high won't hold. It won't hold, or at least it'll go to resistance. So that's the from the bullish argument. However, the selling argument is they established such a position over here for selling that if these guys get to this level, they will have to absorb massive amount of selling, relatively speaking to the time frame, of course. These buyers will reestablish, if they want to take out the high, they need to absorb all of this selling in here. And this selling is the biggest selling in the entire trend. How much is it? Okay, let's take a look. Across this level, it wasn't this high obviously at the time, but across this level now, I mean, I can't go back in time, but here, now it's 30,595 contracts, I think, right? 35,000, I mean, I'll just take the top two levels. 30,595 plus 16,500. What about the lows here? How much is the lows? Now this it wasn't that high before, but basically you have 20,000 and another 22,000. So it's like 42,000. But before, these numbers were a little less and that number is less. But what I did know is the selling was much more than the buying. Even right now, it goes back to support, but it needs to break these guys back, break those lows. Once it breaks, they're done. Once it breaks, these guys, they don't matter, right? If anything, they would cover the position. Right now, it's still here, so they can still be there. Anyway, so the climax happened, the break happened, it retested. Now, how did you know, like, this here told you that they're not going higher? That's it. Those sellers are stepping in right there. And then on this next bar, when that occurs, I mean, you can just get in halfway back or whatever, halfway in the bar, or and then you get this move, right? So what I'm looking for now is I need to see this break to be comfortable with the sell. To be comfortable that it's going to continue to sell to lower prices, possibly go all the way down to this area here, or break this low. If it doesn't, then these guys are going to try to go again for the high. Right? Now, if we look at the count is quite large. If you take a look, okay, there it is. So those are 12, right? 67, around 68. Easily account to the 68, just off of this. Easily 68. What's that 68? So basically this high will, where is this high? Okay, I see. So yeah, very nice. Pop right there. So you can easily go there. Okay, yeah, that makes a lot of sense. This 68 projection is actually the high here, around the high right here. So that makes a lot of sense that it would go and test the prior high. That's all it is doing. Anyway, so that's the idea. Okay. So again, when you in the tape reading approach, you want to see the climb. You want to see first and foremost a level. Me, I have the breakdown level. It's testing it. You could also use the zones and the support resistance and what else? Springs and upthrust and test the breakout breakdown. All right, you know that. Now you need to see a base. What is the base? It's not just talking, okay, it's a base or some horizontal formation. It is called distribution or accumulation. You must have accumulation or distribution at that level. Do not just buy the level. You don't know if it's going to hold. I don't know if it's going to hold. Nobody knows if it's going to hold. We do not guesstimate. We weigh the evidences. The Wyckoff approach is weighing the evidences. So when it goes to levels, strong hands need to enter. And we weigh the evidence. So the evidence here, as it goes to the resistance, what evidence do you have? You have extremely high volume, biggest in 63 bars, with high volume prints. Weighing that evidence, I believe it to be climactic. And what is climax? On a buying climax is distribution. Buying climax is basically the establishing the cells. It's like preliminary selling. It's very similar, but the idea is that you overshoot and sell those high prices, just like the other climax. When it's going down, the selling climax is panic selling on one side, leading to an oversold condition where strong hands will enter and they will buy that panic selling. So this is just the opposite of that. So weighing the evidences at the level, boom, right there. And then it does this. The evidence here is small range bars with a low volume test and a break, taking out this low. And then, so that gives me enough evidences to diagnose the distribution. Why are we doing that, diagnosing accumulation and distribution? As for one reason and one reason only. The way the market works is distribution. What happens after distribution? You get markdown. What happens after accumulation? You get markup. Our objective as Wyckoff style traders is to get markup and to get markdown. You cannot do that if you don't understand what happens during accumulation so you can get the markup, and to what happens in distribution so that you can diagnose it properly so that you can get the markdown. That's the whole point of this business. All right, I'm done. Where did I establish the position? Maybe you want to know that. So I'll tell you that too. It took me 2 shots. What did I do? Anyway, so first was right here in that doji bar, but unfortunately got taken out right here. So I said, all right, no worries. Then it retested here, and I knew it was going to go down. So I established the second one. After this bar on this green candle, near the high of that green candle, when it went up, boop, sold. And that's where I'm in. So now just go to break even and see if it works. Two things. One, it's going to work, go down, or break even. And if break even is only if these guys are still there. These guys are holding the market. This guy and this guy, they hold the market and they hold it again. If they hold it again, which seems like it's a possibility here, right? Because it's going sideways, it might go back and then go right back here. That's scenario 1. Scenario 2, they say, you know what, they're also day trading or whatever. And it says, you know what, forget this shit. I'm going down. I don't know how much it'll go down, but when one very big possibility is the 68 level, why it also coincides with the, excuse me, the high here, the prior high here. So that's a very, very nice, what's the word, confluence, something like that. All right, take care, bye.